Good evening, traders. Today's Monday, March 20th. I didn't get an episode out this morning. I had some things last minute come up. But what seemed like just an inconsequential day actually is a trend change, boys and girls, guys and gals. The EMA 50 was back-tested and successfully back-tested 3 times today. Yes, we have a trend change amongst us. The resumption of the uptrend begins today. You're going to see the tweets that show it. This is the same type of trend change that I called on January 4th. You're going to see that tweet a little bit later in a few moments. The trend change happened on January 4th. EMA 50 was taken. And what happened on January 6th? I invite you to go back on the charts and look. So we're sitting here on March 20th. Trend change. What could happen 2 days from now happens to coincide with FOMC, does it not? You guys have been following the news, the bailouts, the Fed opening up these credit lines for liquidity. Everyone knows he's going to pivot. All of this was perfectly timed, wasn't it? Yes, it was. Perfectly timed. Let's get into the daily tweets. Start off first thing in the morning. Here's basically the action that happened today. Here's the big gap, the gap down. Came back and filled it all before opening bell. And that leaves us to what happened today. Oh, yes. Today was, I'm going to say, historic day. Because what's going to follow will be too much of you hooligan bears' disappointment. And once again, I'm talking to the 1% of you. You're going to get your shorts in now? You're going to get your puts in now? Everything that has had to happen since last week? SPY 383, higher highs, higher lows, perfect timing with XLF. And now the EMA 50 has been reclaimed today. Oh yeah. Slipping away slowly from you hooligan bears, you 1%ers who love to talk trash. Now you're like, oh crap. Now you're watching the game slip away from you slowly by slowly by slowly slipping away. Your shorts are now going to start losing money, losing money, losing money. So, at opening bell, I just said, yeah, I think this is going to be a traditional backtest to EMA 50. Lo and behold, that would be a prophetic statement. I had no idea that it was going to do what it did today at opening bell. Okay, so right here, I'm waiting for the back test. What I mean, not just the wick, not that it's just wicks down like this. This is the wick. I'm talking about candle bodies. I want to see candle bodies coming down here. Okay. Instead, the candle body messed around up here on the SMA 20 line right here. Okay. Here's an example of what I was looking for. I was like, I want to see something like this. I want to see actual candle bodies coming down here and testing it. I don't want to see wick down. That's what I said. Let's see right here. I'm going to scalp. Let's see. This touched EMA 50, but not a true back test. I'm talking about the wick. Yeah, right here. It touched it, but it's not a true back test. It actually only back tested right here to SMA 20. Okay? That's what I'm talking about. Too far above. I said right here. The candle is too far above EMA 50. But it's a scalp long, so I'll scale long. On second thought, I'm gonna watch. I was like, you know what? No, I'm not gonna do it. I didn't like that. I saw wicks down at the time. I was at the time, wick down, wick down, wick down, and this wick just touched it. I'd rather see a candle body go down there. Okay, so that's like, nah. You know what? I changed my mind. I'm not gonna go long. So that would have been equivalent to like right here, right? It would have gone up. It would have pumped up for a little bit, but then it would have came back down, right? So you'd have had to like been in scalp mode if you wanted to get any profit. Okay, coming up to right here. Coming up to this line right here, the half channel line at 392. Essentially back tested to SMA 20, but not to EMA 50. That's what I'm talking about earlier. I said, yeah, you back tested the SMA 20 right here, the gray line, but you didn't back test to the EMA 50. I was like, eh. So here's my warning: if you guys are scalping long, you need to be vigilant. You almost need to just like get out, like quick scalp and get out, okay, because it can turn down. So it can turn down to truly backtest EMA 50 at any time. See, I'm already giving out that warning. At any time, and it looked like at this point it was going to do it, right? It's like, oh, here we go, boom, 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 but you know, it stopped and went back up, like, So here I was. At this, when I sent this tweet, it would have been right here at that time, right here. I said, you know what? I'm just gonna wait, literally wait another 25 minutes. That's exactly what I did. Because I waited because I want to see if the new 65-minute candle is a backtest candle. So what I mean is, I want to see see if you look at this up move, up, 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 up. I was thinking the new 65-minute candle is going to be a true back test move, right? That's why I was actually going to wait 25 minutes. So it's like, I don't even care what the price action does. Right here, I'm going to wait 25 minutes for this next candle. Okay? This one is pumping too much. Too much pumping. Okay, yep, here we go, coming down. Right here. At the time I sent that tweet. It's why I'm just watching, because you don't know at that moment. Are you going to turn up? You're going to keep going down? See, you don't know. You have no idea what the market maker is going to do. All you know is, I just got a wick that touched EMA. That's not satisfactory. I want to see you come down and touch a candle body, touch that line with a candle body, not just with a wick. And have a couple more candle bodies staying down there, right? Because the definition of wick means a candle body did go down there. It was a candle body at one time, but then they bought it back up to wick up. Okay. So yeah, at the time I would oops. In 13 minutes, the candle body closes. You know, it would have been like, oh well, I don't know, right around here or so. We can expect a move with this new candle body. And what did we get? Yes. Yeah, we got a move, all right. It was this one. See what I mean? See? So, I was watching for if this was a backtest candle, a red candle, not a green candle. Turned out to be a green candle, actually. Right here. Turned out to be green, not red. I was thinking it's going to be a backtest red candle. Because you already had three consecutive 65-minute candles previously. I was like, you can go for 4, right? See what I mean? Just trying to be reasonable at what your expectations are, not FOMO in. Okay, so, yep, there's the move. The move was up, not down. I was like, oh. At this point, I still didn't get calls, guys. I still didn't. Because I'm more in observation mode than I am in like, oh, I just want to scalp something. Or I just want to get in there and try to make a quick buck. Okay, so. Okay, move in 3 minutes. Okay. Look what I say down here first. My inkling is the move will be down. Thinking of shorting this. at this time right here, right here. The new 65-minute candle is about to close, and a new one's about to be open. But look what I said right after that tweet. I said, but I'm torn because I see no bearish divergence on the MACD. So in the meantime, I'm just watching. So in the end, now that hindsight is 2020, the no bearish divergence on the MACD, which is data driven, won out. Even though I had I had an inkling the move would be down. But the data won out. There was no bearish divergence. So it kept going up. See what I mean? You got to go with what the data says. You can't guess. Or don't ever project because you want it to go down or you want it to go up. See what I mean? See, down here I was thinking, well, I have an inkling the move will be down. So that's me kind of projecting. But at the end of the day, I changed my mind. I said, you know what? There's no bearish divergence here on the data, so I can't justify getting puts. Even though I have a suspicion the move will be down. And I'm glad I didn't because the move went up. See? There you go. No bearish divergence. That's why it just kept going up. And guess what? I'm scaling long. So, yeah, I went long. Went long right there. Right there. Because now I've seen just a lot of data. No bearish divergence on the MACD. There was strength there. So, I have an inkling. This will hit the pink downtrend line 393.75. Guess where it closed today, guys? Exactly at that pink line. At the end of the day, in the final minute of trading, boop, you touched it. You went right exactly to this pink line at the end of the day. Perfectly. So, yeah, I was like, yeah, I think I know where you're going. And that's exactly where it went to. So, by the way, that pink line starts from March 6th, when we filled that 407, 408 gap. That's the downtrend line. I'm looking to see what futures is going to do tonight. Is it going to take it? I have no idea if it will or not. So that's what we're looking forward to. No bearish divergence. 65-minute MACD is now above the zero line. Oh, I don't have. Oh, yeah. Well, no, I have it right here. Yep, it's above the zero line and it's separated from the signal line. Okay, just watching. Until I see bearish divergence, I can't short it. That's basically the hard and fast rule that I always follow. Until I see the divergence, I cannot short it. I can't. There is no justification in the data to short. That's the bottom line. Okay, meanwhile, keeping my longs so far. Okay. So, it was right here. Yeah, right there. I decided, you know what? I want to go ahead and scalp out. Just go ahead and make a quick profit. Whatever. I was like, yeah. So, all these different points of entry. Hindsight's always 2020. You could have gotten in at different points in time depending on your aggressiveness, your style, what is your risk level that you want to, enter in, whatever. Okay, so made a quick buck. Yada yada yada. Okay, all right, here we go. Now it's starting to come down. Finally, I was like, yeah, you're gonna come back down, man. All this wick to touch the EMA 50, but no candle bodies. Nah, you're gonna come down. So, you could have shorted it at the time, but it's been demonstrating strength all morning, and I don't see bearish divergence yet on the MACD, which was right here. See that? There was no divergence. It just came down. It wasn't that, oh, well, this is making a lower high than this previous hump. There's your bearish divergence, and then it collapsed. No, it just went down with the price. So when it does that, you don't really know exactly where the bottom is going to be then. When there's no bearish divergence and it's basically neutral convergence, now you're just guessing. Well, is it going to stop right here? Is it going to stop at the SMA 20? Right? It did all morning. See what I'm saying? You don't you don't know. You don't know where it's going to stop. So obviously hindsight 2020. Well, you could have shorted it right here and made good money. Oh, yeah, you could have, but okay, but you don't know where it's going to turn around, turn and pivot on you. Okay, so okay, this could be the dip to the SMA 20 that creates the bearish divergence. What I'm talking about here is, here's the dip right here. Had it hypothetically turned, flattened out, let's just say right here, flattened out and then curl up, and then the price makes new highs, but the MACD does not make a new high compared to the previous high hump right here, then that's the divergence you're looking for. That's the collapse. Then that's what I'm looking for to say, all right, now I'm going to short that. Now I'm confident in shorting, for example, hypothetically, this high that would have been higher than this high, right? I'm confident in shorting this one, more confident than I would have been shorting this one. Does that make sense? So that is what I was tweeting about. At this point in the game, I'm most interested in waiting for bearish divergence. Yeah, see? Yeah. So at this moment right here, I'm like, well, it could consolidate like it looked like it was going to do. See that? Look at this right here. It looked like, oh, I can see you consolidating under SMA 20 and then going back up again, right? So it's like, I'm just going to wait until I actually see bearish divergence. At this point in time, this fall, it's not bearish divergence. It's just neutral. It's neutral convergence. The MACD is following the price. Okay? So, if I see bearish divergence, then I will get puts. I'm confident in getting puts then. Okay? Because we have an idea where the top is today. We can see it, right? So, ended up being, yeah, that was true. That was the top earlier this morning. All right, interesting. Come on down. You're the next contestant on the EMA. Is right. Showing the 80s. The price is right. Okay. Remember earlier when I questioned that EMA 50 backtest right here? I say I'm questioning this. Same thing right here. I don't want to see a wick. I want to see some candle bodies going down here. Well, now you have it. Pay the piper. Backtest EMA 50. And that's what I was saying last Friday. Or no, last Thursday. Remember that big move up on Thursday? I was like, no. No. You're gonna come back and pay the piper. Sooner or later. I don't know when you're gonna do it. It ended up doing it on Friday morning, right? After Thursday's trading day. But today it didn't wait until tomorrow. It came back and paid the piper in the afternoon. Okay? So in 25 minutes, the next candle starts. Oh, that would have been around here-ish. Right now I'm showing you the on the left, the hourly chart. But in 25 minutes, the next 65-minute candle starts. And provided a 391.05 holds. Okay, so that would have been down here. Yeah, right here. 391. It's really small. But it's the red line right here. Provided 391.05 holds, I suspect the next move could be up. And that is exactly what happened. Upperoo. Here we go. Okay. Okay, here we go. Now I'm starting to get, I'm like, uh-oh, what's up? What's up with this, man? Right here. So, I just said, uh-oh, it's hanging out, consolidating under EMA 50. It's waiting for the next 65-minute candle to form. Because now I know, I'm 100% sure. When the next candle forms, that's when the moves happen. It's not at the end of the current 65-minute candle that's about to close. Moves happen when the new candle forms, not when the current one is closing. Okay? So here we go. If this takes back the intraday EMA 50, that's gonna we got a trend change right here. This was the first one. This is the first time today. Okay, so yeah, see how it's really hugging. It's hugging EMA 50 right here. I'm looking for some lift. I don't want to see. It's good to see wick up, wick up. That's good to see. But eventually, you have to lift off. You got to get off the line. You can't be hanging out on the line forever. You have to show lift, which is what this candle was right there. Okay? Okay, so new 65-minute candle starting right here, right there. And yeah, you know what happened. New candle, boom, up we go. It was already showing the pattern it was going to go up. Look what the pattern was. Wick up, wick up, wick up, and then boom. You can actually anticipate when the move is coming, when the new candle is forming. That's a true 100% bona fide fact. Okay, yeah, here's where I'm just saying, I'm not seeing lift. I need to see more lift. I'm not just gonna go long just because it looks like you're wicking up. I got to see some lift because I've seen times where you never have lift. You spent like 30 to 45 minutes just stomping on top of wicking up on the EMA 50, only to go down. I've seen it. That's like I want to see some lift. Here we go. I'm stunned. I couldn't believe it. I didn't think it was going to happen. I did not think this was going to happen. But there you have it. So, otherwise, I'll go long soon. Yes, sir. So, yeah, I'm seeing some wick down, wick down. Yeah, I'm like, guys, I think we have a trend change in the making, provided that we don't somehow lose EMA 50 by the end of today. You can gain it, but then if you lose it, oh, there you have it. Okay, so let history be your guide. January 4th, quietly took back EMA 50. January 6th, explosion to the upside. We all know what happened after January 6th. March 30th, today, quietly. Wait a second. Is that right? 20th. Oh, gosh. That's the reason why I was like, there's no March 32nd. Oh, God, that's typo. Sorry. March 20th, today, quietly take back EMA 50. March 22nd, FOMC, explosion to the upside. Yes, sir. I know, it doesn't seem believable, but the evidence is in my January 4th tweet. The exact same pattern happened. EMA 50 was successfully backtested. And January 6th was the explosion. So it's actually possible. Actually, what happened on January 5th, on the 5th, was actually the 5th was a down day. Even though it took back on the EMA on the 4th, the 5th was down. But then the 6th was big time up. So that could happen tomorrow, actually. It could. I can see that. They're going to sprinkle in some news. They're going to figure out how to put some news in there and say, oh, something, some other fabricated news, just to justify the move down on Tuesday. So, okay, so we're back to EMA 50. Oh, that was right there. Yeah, it's right there. Yep, right here, right there. We're back. Let's see how the candle closes. Luckily, that candle, look at that. It closed not straddling. EMA 50 went back up. We all know it did come back down, but the key was no straddling. I'm gonna show you a tweet in a little bit. Elaborates on that. Okay, this is not a short squeeze. The fact that it's coming back to EMA 50, this is not a short squeeze. Last Thursday was a short squeeze. Last Thursday was a bona fide 100% short squeeze that went lower on Friday. You had to pay the piper because you squeezed. You didn't pay the piper on Thursday, but you paid that piper on Friday morning. And then you gave even more back because you were down all day. So, okay, so it's wedging. Wedging can kind of offer you some nuance into how you interpret the EMA 50 backtest. Because you guys know in a wedge, it's up and down, up and down, up and down. So naturally, you're going to cross that EMA 50 in that up and down motion. So it's going to seem like, oh, you failed the backtest one. Well, actually you're wedging. So it's not so much that you fail this because it's part of a wedge. It's when you come back up, can you backtest appropriately? See that? So it failed, but could you come back up and backtest? See what I mean? That's the key. Backtest and then show lift. Okay, in 10 minutes, here we go again. In 10 minutes, the 65-minute candle closes. What are we talking about? Right here. Guess what? Guess what? Guess what? Boop. Went up. A move is coming, and my suspicion is the move is up. Do you see how you can anticipate these moves by the mere fact of a 65-minute candle body closing? You can anticipate a move is coming. Now, whether you anticipate correctly that it's up or down, that's a different story, but you can anticipate a move is coming. All right, so there you go. There you have it. New 65-minute candle. Let's see what's up. We all know what happened. Okay, scaling out of calls. Good enough for today. That's good enough. So, before I scaled out, I mentioned right here there was some hidden consolidation under 393.20. That would have been right there, right there. See that? Consolidating under that perfect blue line. Look at that. Look at that perfect consolidation pattern. Perfectly flush under 393.20. That's the blue channel line. Perfectly. Perfect. Look at that. This is like, man, you couldn't draw that up any better. Okay? So, it respects those lines. Yes, it does. Important detail today. 3 times. 1, 2, 3. Right? 3 times today. It backtested successfully the EMA 50. Each one of those times, not a single candle straddled the EMA 50 line. Not a single one. That's hidden bullishness. That's important. It's hidden bullishness. Okay? So, reclaiming EMA 50 means the uptrend is resuming. It doesn't mean every single day is a green day forever. It just means you don't need short squeezes now to help you grind up. You don't require it. You still might get it, but you don't require it. The uptrend now resumes. I track this stuff, guys. I know what I'm talking about. I talk about the EMA 50 every single day. I hammer it into my tweets every single day. So I know when that EMA 50 is taken back and back tested. The last time that was successful was February 16th. It is now March 20th. It has been reclaimed. So get ready. And I don't recommend getting your puts in. I know some of you would love to. But actually, I would like for you hooligan bears to call my bluff. I want you to get puts, actually. I know deep down inside you're not going to do it. You don't have the courage to do it. Which is why you actually watch my videos. Even though you'd like to leave nasty comments. Then why are you watching? Joke's on you guys, man. So, yep, 65-minute chart was the thing of beauty today. Yeah, you can kind of see it here. I showed the 65-minute chart on the first slide, actually. But here's the zoomed in version. There's that pink trend line. Exactly, it stopped right there at close. Exactly. No coincidence, guys. No coincidences. Please feel free to follow me on Twitter, where I give real-time tweets, intraday. Don't forget to listen to your favorite music while you are trading. Helps you get in the right state of mind, helps you get into the right flow state, and to achieve your Zen. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 000, signing off.